Stock accounts. If you want to save money, you open a savings or money market account. However, if you want to invest, you open a brokerage account. Stock or brokerage accounts provide access to capital markets to trade equities and fixed income securities, as well as other types of investments. Over the long term, the return on a diversified investment portfolio is much greater than a savings account's interest rate. The main difference is clients may need to sell some investments to withdraw money from their stock account. A stock is an investment instrument used by businesses or corporations to raise capital. There are two approaches for the stock market: buy and hold and short-term speculation. The buy and hold approach is for investors looking at holding on to the investment for a long period. This investment involves looking at a company's past and present earnings, industry outlook, and doing some research on the stock performance. By investing in quality stocks, clients can ride out fluctuations in the market. Short-term speculation is a more focused approach, often called day trading, which makes investments based on technical aspects of a stock. By studying the statistics that may give insight into the direction a stock may be headed, clients can make short-term investments by buying low and selling high for a quick profit, or shorting the stock when it is expected to fall. There are two different types of brokers: traditional and discount. Traditional brokers, such as Merrill Lynch and Wells Fargo advisors, specialize in providing personalized investment advice and offer clients a wide range of financial services for a premium. The fees for these services are often more because clients pay commissions. Discount brokers, such as Charles Schwab and E-Trade, specialize in offering low-cost investing services and education for individuals who want to make their own investment decisions. Most discount brokers have representatives available for occasional questions, and some have professional account management available for an additional fee. There are also two types of accounts: a cash account and a margin loan account. This is customarily known as a margin account, although clients can have both. In a cash account, the client must pay for securities in full at the time of purchase. In a margin account, the brokerage lends the client funds at the time of purchase, with the securities in their portfolio serving as collateral for the loan. This is called buying securities on margin. As with any other loan, the client incurs interest costs. There are risks that arise from purchasing securities on margin that do not come with most other types of loans. For example, if the value of the securities decline significantly, the account holder may be subject to a margin call. This means that the client will be required to make a deposit of cash or securities immediately, or the broker can sell securities in their account to cover any shortfall without notifying the client prior to the sale. Typically, stock accounts require an initial investment of at least $1,000 for some of the discount brokers and more for full-service brokers. When clients execute buying and selling of investments, they will be charged a commission. These fees range from $5 to over $100 per transaction, depending on the broker. Another important element for stock accounts is risk tolerance. With this, the client develops their investment strategy. There are 4 levels of risk: conservation of capital, income, growth, and speculative. These are advanced trades, such as options and shorting stocks. Risk tolerance is how much money your client is comfortable losing if an investment does not perform as anticipated. Time horizon, future earning capacity, and the presence of other assets will also affect the client's risk tolerance. Most people are willing to take on some risk when they have a stable safety net. Although there is much more to stock trading than is covered in this lesson, I have given you a good review of stock accounts for a retail bank environment. In our next lesson, we will look at private banking.